Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good Friday morning. Welcome to Financial Issues. We're so glad that you joined us here today. We are a ministry that helps to educate people about financial issues from a biblical worldview. So we hope that you are encouraged to adopt a biblically responsible investment strategy as you learn what that is and how it enables you to honor God, to put Christ first in all areas of your life, including the way that you invest. Speaking of biblically responsible investing, we want to call your attention. We have 2 letters of encouragement for you to sign. So if you've been listening to the show recently, you've heard us talk about Tractor Supply, who was kind of was really under some scrutiny for some of the woke practices that they were doing at their company, really just alienating their workforce, really ticking off their primary customer base by promoting the LGBTQ agenda and woke policies, DEI, and all of that stuff. They heard from their shareholders, they heard from their customers, and they did an about face. They changed their course. They issued a statement, said that they're not going to support those kind of things anymore. They're going to refrain from festivals and parades and things like that that celebrate the LGBTQ community, and they're just going to focus on business. Hey, there's a novel idea.
Right.
So I think it's a novel idea that this ministry has been talking about for 25 years or more. So, glad that they're finally getting the memo that this DEI stuff is not good business. So they did an about face. John Deere was next up in the spotlight for doing some of the same things. They got some pushback, and they've issued a statement of change, not as strong of a statement as maybe Tractor Supply did, but both of these companies are companies that they're not currently on our buy list, but they have been on our buy list in the past, so we know a lot of partners own them. So we were getting ready to dump them for for the things that we were seeing unfolding, but now we don't have to. So it's always good to speak up and speak out for truth. A lot of times that's in a sort of has negative connotations. We're saying, hey, don't do this. We're, kind of fussing at companies and things like this. But now we get to give them a pat on the back. So let's not be remiss in doing that. You did get a partner alert if you are a partner, but you do not have to be a partner to sign these letters of encouragement. You do not even have to own outright the companies to give them a pat on the back. So go to financialissues.org, and a little ways down the page on the left-hand side, it says take action. You click on that, and you're going to see both of those letters there. It won't take you very long at all. You can click on that. You can review it and sign it. We encourage you to do it today. Also, if you're a partner, we had a partner conference call yesterday. That is posted on the website. Log in and take a look at that. Give that a listen when you have a chance. Let's get to the stewardship verse today. It comes from Proverbs 3:13. Blessed is the one who finds wisdom and the one who gets understanding. Seth?
I love that, Shana. By the way, I was getting fired up when you were talking about those petitions there. It's awesome. We have over 300 signatures on one and almost 200 on another, so we're making great strides. Yeah. It's awesome. But, this is a great verse, Shana. The scripture promises we're blessed when we find wisdom, and true wisdom only comes from God, obviously. We say that often on the show. We find wisdom in God's word. We find it when we ask him for it. We find it from the counsel of people in our lives who are godly as well. And so that kind of leads to our topic for the day of seeking good counsel. The topic is, should I utilize a financial advisor? And Shana, this is a question that we get often. Just to begin, to kind of start this, what's the true purpose of a financial advisor, and how might a financial advisor be helpful for an investor?
Yeah. So, the term financial advisor is really kind of blanket applied to all financial professionals. But, you have to make some distinctions there. There are different types of licenses. There are different types of financial professionals that act in different capacities. For example, one financial professional who is not a financial advisor that actually requires a special license may be only able to sell things like mutual funds or annuities or insurance products. You have to have a different type of license to be able to sell individual stocks and more types of investments. So, financial professionals are really going to be limited by two things. One is the licenses that they have, and the second thing is the firm that they work for. So the firm that they work for is going to have a lot of influence on what they can sell and what they're encouraged to sell. So, you have to sort of look at financial advisors as a type of salesperson. I think a big misconception is that a financial advisor sits in front of a screen all day and trades stocks for their clients. But, that's really not what it is. A financial advisor can provide helpful insight on different topics. Managing money, you can hire someone just to manage a portfolio for you. You could also hire someone to give you financial advice, like, of all of these sources of income. If I'm going to be retiring, I have Social Security, I might have a pension, I've got some IRA, I've got some other money saved. What do I use first? How do I draw those things down? And, how do I do it in the most tax efficient way? What about estate planning? How do I transition assets to the next generation? Or, what's the best way to fund the kingdom if that's one of my goals? So financial professionals can be very helpful in a lot of instances.
Yeah, good. And you had sort of gotten to this a little bit, Shana, with the institution that governs these financial professionals. But talk just for a moment about, the potential of any downsides with using an investor. What could we be on the lookout for?
Well, just like anything else, if you're going to go to seek advice, you want to consider the source. Where does their wisdom come from? Does their wisdom come from the world? Were they trained in college? Were they trained by liberal Wall Street? What kind of worldview do they ascribe to? Or are they Christian? Is their wisdom found in the scriptures with God as the source? Are they praying people? Where does their wisdom come from? So, the scriptures tell us not to be unequally yoked with unbelievers. So, when you're going to go get, you probably wouldn't go to a divorce attorney to get marriage counseling, right?
Yeah,
so,
amen.
you have to
or
be
Bill
careful.
Clinton. Sorry, I'm sorry. That slipped out.
Right. So, you have to consider the source. You have to consider where their wisdom comes from. Yeah. So, think about the things that you talk about. When you go to interview different financial advisors, and I hope if you are considering doing that you will interview them. There's a decision to be made on your end as to whether or not this person aligns with your values and can lead you in the right direction without causing you to violate any of your conscience. But there's also, there's an interview going both ways. For the financial professional, a lot of times, they're evaluating as to whether or not you're a good fit with their practice as well.
Yeah, that's good. And Shana, as you know, we talk about it a lot, this is a do-it-yourself strategy. So how would you counsel our listeners if they're in a situation where they're considering using a financial advisor, but they also want to use the financial issue strategy and do as much of it as they can themselves?
Yeah, so I mentioned there's different components here of, financial advice and financial services. So there's portfolio management. That's the person who's, or the source that is deciding which investments are going to be included in your portfolio. So which things to buy, which things to sell, when to do it, asset allocation, all of those kind of things. So if you're going to hire someone to do it, I think it's probably a bad idea to think that you're going to have a lot of input on those decisions. So you're kind of turning that over. When you buy a mutual fund, you're turning over the day-to-day decisions to a mutual fund, the mutual fund managers. Same thing with an investment professional. Now, I will say this, part of a conversation, if you're going to have one with a financial professional and it's specifically for the purpose of managing the portfolio, you'll want to find out how they do it. Many financial professionals do not do research. They do not do the day-to-day transactions. They have a department that does that. They're some of the ones that work like that are mainly focused on financial planning. So you want to make sure that you understand how those investment decisions are driven. For example, and you want to know what their philosophical view is. Do they know what biblically responsible investing is? Do they think it matters? Because you don't want to get into a situation, if your heart is convicted and theirs is not, you don't want to get into a situation where they're trying to talk you out of your conviction or where they won't help you fulfill your convictions. So if someone wanted to hire me, but they didn't care about biblically responsible investing, and they said, yeah, that's great, but I want to own these other non-biblically responsible stocks, I would decline. So not out of judgment, but I'll have to finish this thought when we come back. I'm running out of time here. We're going to take a break, and then we'll come back with more financial issues.
On the day I found I was pregnant, I was full of emotions, and I just was so overwhelmed, and I don't know if I'm ready for this huge, life-altering, changing commitment. I had individuals around me not wanting me to have this child. And somehow, and I was driving and I saw the Women's Help Center sign, and I immediately turned in. That just took relief off of me. And I was like, you know what? It's gonna be okay. They gave me the confidence and the support that I needed to be able to go out and face the world. First time I held Finnegan, I just lit up with joy. I was so excited. This little boy that I had in my life, he is loving and generous. Watching him just grow and flourish into this incredible human being has just been so rewarding and so uplifting. Looking back, I don't know what I would do without him, because I needed him more than I think he needed me.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Welcome back to Financial Issues. Thanks for joining us today. Folks, we are going to pick up on that conversation that we were just having in the first segment there. We're going to do it in the next segment after the next break. We need to get to the financial issues of the week. So, because at Financial Issues, we help you stay in the know about the financial issues of the day. We help keep you abreast of what's happening in the economy and the markets and help you understand how that impacts your own personal financial issues. So, my takeaways from this week's economic news, ending today, July the 19th of 2024, are all of the following. So, the biggest news, I guess, this week follows the attempted assassination of former President Donald Trump over the weekend, right ahead of the Republican National Convention. So, the RNC concluded their event yesterday last night with Donald Trump accepting the Republican nomination. He was very clear to acknowledge that he's only still here by the grace of God. So it was apparent to me as I watched him speak, it seemed like there was I didn't finish the whole speech. It was too late for me. It was a very long speech, but I saw the first part, the first half of it, I guess. And it was clear to me that there was a new sense of humility, that is starting to come over the former president, it's very clear to me that he understands that God holds his life in his hand. So I just pray that this assassination attempt is that God is using, as he says he always does, and he's always true to his word, he uses the things that were meant for evil for our good and for his glory. And so I hope that this assassination attempt is causing the president to humble himself before the Lord and to incline his ear to hear what the Lord has to say to him, and that he would be used, as Franklin Graham said last night, it wasn't Franklin Graham. Franklin Graham did speak, but there was another pastor that spoke and really, really gave the whole idea that President Trump has been raised up for such a time as this. So, and on the flip side of the aisle, it looks more and more like what I've been thinking for a while is that there will not be a binary choice on the ballot between Trump or Biden. It will be someone other than Biden. Even Nancy Pelosi, I heard in one headline, is telling Joe that he can't win and that he needs to stop down. The Biden campaign is still adamant that he will continue, as far as I've heard. But, if you're reading between the lines, President Biden has COVID. And right before he announced that he had COVID, he said that, if he had any kind of major medical issues, that he would step away. More Fed speak this week. Powell spoke to the Economics Club of D.C., I believe it was, on Monday, and he said that he sees long and variable lags that the Fed knows is inherent with monetary policy, that rate cuts or rate hikes don't impact the economy right away. There are long and variable lags. And he also said that he wouldn't speak to the timing of the cuts, but that they wouldn't necessarily wait until inflation is 2% to start those cuts. I talked more about that on the partner conference call yesterday. Make sure that you log in if you're a partner and listen to that. Part of the Fed committee, Austin Goolsbee, gave a flicker of hope also this week in a speech that long-anticipated rate cuts are on deck. The CME FedWatch tool that gauges the odds of rate cuts checked it out this morning right before the show, and it says that there is a 95% chance of no change to rates in the July decision coming up just at the end of this month, and there is now a 95% chance of a September cut. So that is something that I've maintained that I believed was going to happen, whether it's from real economic data or, leading up to the election. I think it's a pretty much foregone conclusion now. The Fed also released their Beige Book, which is, a compilation of the 12 Fed districts and the economic activity that they report. And it is showing cracks emerging after these long and variable lags. So 7 out of the 12 districts reported some level of increase in activity. 5 noted flat or declining economic activity, and that was 3 more than in the prior period. On the consumer, they said household spending was little changed this period, according to most district banks. Perhaps high inflation can be the cure to high inflation. As consumers are really starting to push back on these price increases, these dramatic price increases that we've experienced over the last 3 years. You have low and middle income consumers that are really stretched or maybe beyond their limits, as we're seeing credit card balances on the rise. So the consumer is starting to push back, and, maybe higher inflation is the cure for higher inflation. So with these credit card balances on the rise for the lower and middle income consumer, that is a concern. After all, when in Rome, when in America, do as the American government does. Borrow money that you don't have to shore up your budget. That's exactly what the American government does. I guess we'll just continue turning a blind eye to history. I AI'd this morning, and this was This was the summary that they gave me about the collapse of the Roman Empire, that it was influenced by excessive spending, particularly on military campaigns and public welfare. Rising administration and military costs led to heavy taxation and currency debasement, crippling the economy and trade networks. Additionally, reliance on slave labor created economic stagnation as the empire could not sustain its expansion or maintain a stable workforce. Corruption and political instability further exacerbated these issues, contributing to the empire's decline. Thus, while excessive spending was a significant factor, it was part of a broader array of economic challenges. So, does any of that sound like I was reading the narrative for America? I wasn't. I was reading the narrative for Rome and its decline. But back to the Beige Book, it also said that prices increased at a modest pace overall, with a couple of districts noting only slight increases. While consumer spending was generally reported as little to no change, almost every district mentioned retailers discounting items on price-sensitive consumers, or where price-sensitive consumers only purchasing essentials, trading down in quality, buying fewer items, or shopping around for the best deals. Most districts noted that input costs were beginning to stabilize. However, Atlanta specifically noted that products like copper and electrical supplies have seen a notable increase over this period. So, some definite insight to the consumer. Shipping costs, speaking of inflation, shipping costs continue to push higher. And I think we've got some graphs to put up on the screen there to really kind of show. I've indicated with a red arrow there the part of the graph to call your attention to. But I doubt that more inflation is on anybody's holiday shopping list. But shipping costs won't be fully absorbed by retailers stocking up on inventory and may put a damper on holiday sales. So you're seeing on your screen two different charts here, and this is shipping costs. Shanghai to LA route took a breather this week in its upward trajectory. Shipping prices fell $224 week over week to $7,288. That's how much it cost to ship to send one of those shipping containers from Shanghai to LA. Folks, that is 250% higher than the end of 2023. Yes, just 6 short months ago. It was $2,100. The Shanghai to New York trip has tripled this year. Prices rose $225 week over week to $9,612. To put that in perspective, pre-COVID, February of 2020, the cost for that shipping rate was $2,800 to ship a container from Shanghai to New York. It skyrocketed to over $16,000 after COVID when we had the supply chain shortages, and then it's gone back down, but now it's up 250% this year to $7,288. So as far as the unemployment market, retail sales, let me not skip over retail sales. Headline this week came out flat, a 0% increase in retail sales. It was an upside surprise. 0% doesn't sound good, but they were saying it's an upside surprise because they were expecting a decline. Core retail sales up 0.9 of a point, but I don't think that means that we are out of the woods with the consumer, as I referenced just a little bit earlier. The weekly unemployment report shows that the labor market continues to weaken. The pace of firings continues to pick up, while those who are already collecting unemployment benefits does as well. Last week was a one-off, as we saw the initial claims numbers seem to buck its losing trend, but that was only because of the holiday week, the 4th of July holiday interrupting the work week. This week's number is back on track, and it's marching higher. 243,000 initial claims were reported, well above the estimate of 229. It matches the highest print for unemployment since August of 2023. Continuing claims reveal that the pace of hirings is muted. Firings increasing, hirings going down, not a good set up for the labor markets. Continuing claims rose to 1.867 million from 1.847, about 10,000 more than expected and the highest since November of 21. It's risen above and stayed above that critical level of 1.8 million. I think we've got a chart to put up on the screen for that too that shows that 4-week moving average with an arrow there indicating the trajectory as well. So this highlights the trend higher. The continuing claims ratcheted up to 235,000. I'm sorry, 235,000 from 234. That's the 4-week moving average. That's just below the highest of last August. Unemployment rate is 4.1%. On the Fed's dot plot measure, we're already there for what they're expecting for a year end. Earnings season continues, and we'll give a report on where we are in the markets when we return from the break. So now that you're in the know about the current and upcoming financial issues, we hope you'll find out more about our ministry to help you integrate that into your situation at financialissues.org. Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
Every time I turn on the news, I get so frustrated. When I read a headline, it's obvious they're just trying to manipulate me for clicks and views. I just want to stay informed about what's going on without all the drama and opinions. I knew I needed to find an alternative, and thankfully I found FISM News. They keep the viewers up to date with all the latest news without the extra noise. Check them out by going to fismnews.tv. That's fismnews.tv.
Fear and uncertainty can cause us to hold things tightly and rely on ourselves. But during uncertain times, as believers in Christ, we are called to surrender fully to our sovereign God. The call to surrender to Jesus is one step in our growth in holiness. And it doesn't just mean you give over a few things. It means He gets it all, including our finances, our investments. Learn a biblically responsible investment strategy proven over 25 years. Keep the money God has entrusted to you out of companies that participate in things that God detests. Fully surrender. Become a Financial Issues Partner today. Learn more by going to financialissues.org/join. That's financialissues.org/join.
Well, this property was actually purchased by my great-grandfather, and we were able to come back to the farm a few years back to keep the family farm, hopefully, in the family.
Working together is a lot of fun sometimes and can be very challenging.
Iron sharpens iron.
Iron sharpens iron.
We want to try to provide the freshest possible and healthiest possible produce for our neighbors and our friends and the people that we are able to touch in their lives at the farmers markets. Samaritan Ministries is a perfect fit because we feel like we can actually partner with other Christians to help them provide for their medical needs.
We're Tony and Ginger Malik, and we are Grandma and Grandpa's farm in Sparlin, Illinois, and we are Samaritan Ministry members.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Today is Rapid Fire Friday, so if you've got a question, our phone lines are open, 610-363-1110. Today's the day to call and ask all of your Rapid Fire Friday questions. So 610-363-1110. Well, yesterday the markets continued downward as sell-offs continued from recent gains. By the end of the day yesterday, the Dow was down almost 1.3, the S&P down almost 0.8 of a point, the NASDAQ down 0.7 of a point. So could the bears, recently in the minority, finally be right about a coming correction? Well, if we get anything less than a stellar earnings season from big tech in the coming weeks, we might have some buying opportunities in short order and really see the broadening out that we've been hearing so much about. So a little bit of a scare this morning as America came awake. There was a glitch in a lot of systems, a lot of Microsoft systems from an update that was put out by CrowdStrike. Initially, it wasn't known what was causing all of the outages. We've seen airlines down, big enterprises, some of the TV broadcasting. Luckily, we didn't have any issues here. I trust that none of you opened your computer and saw the blue screen of death, they call it. But turns out CrowdStrike was aware of what happened. There was a glitch in one of the updates that they pushed out to the Microsoft systems, had a sort of a bad reaction with those and caused some problems, but they're working to get everything back online. I was hearing in the pre-markets were hovering around the flat line, hearing that the U.S. exchanges would have no trouble opening this morning, and it appears that they did not. So the markets have opened, and the NASDAQ and S&P are hovering around the flat line, just dipping into red territory just a tad. The Dow is down 0.62%. So a little bit of a muted reaction there. Let's get to the phones. We've got Ethan. Ethan's calling from Alabama. Hi, Ethan. You're live on Financial Issues.
Seth and Shana, Seth and Elijah and the whole team.
Good morning, Ethan.
Good morning.
Yeah, it's great to be with you. I have a question about rebalancing in the materials sector. I'm a little bit light there, but I'm in the growth and income 55 to 65 model, and I have 6 positions, none of which are on the buy list currently, and I need to add some. So my question is, would I be better off to maybe drop one out, what position that I have, which is MA22, which is the lightest position that I have, and add from the buy list MA42? Would that sound like a good idea?
Would you say that you're more, as an investor, more focused on growth or income?
All my life I've been more focused on income, but listening to your advice, I am moving more to focusing on growth. I think I tend to lean toward income excessively.
Yeah, I mean, it's not officially a part of our strategy to replace one stock with another, but I think that would be a fine move for you.
Yeah, I have trimmed the material sector because I had 8 a while back, and it's just spread too thin.
Yeah, I would agree.
And that one, I think, is my lightest, so to drop it off and then add the one from the buy list, I thought probably would be a good move.
Yeah, I would agree. I would support that.
All right, great. Thank you very much.
Good question. Thanks for calling, Ethan. We appreciate your support.
God bless
you
buddy.
as well, Ethan.
Yeah.
Okay, we've got some things happening on social.
Yeah, we do, Shana. Let's get to, I believe we had a question come in just now from Sherry. in Texas saying, good morning, I'm in the 55 to 65 model, 10 years to retirement. I need the international sector. Should I split percentages between the ETFs and mutual funds or put the whole percentage and invest in a Roth account? What do you think, Shana?
I lean a little bit more toward the ETF. So, I mean, I would say go with the ETF. And as far as whether or not in the Roth account, I guess it depends on how much money you have available in the Roth account. The very first thing that I would position in the Roth account would be my technology stocks. So if you have any technology holdings, I would make sure that you have room in your Roth for that. I think that those will probably grow faster than the international ETFs or mutual funds as a whole.
Good stuff, Shana. There's an interesting question we got from Austin over on Ask Shana, two-parter. He says, Shana, what do you think about Freddie Mac licking their chops at the secondary mortgage market? You want to tackle that one first?
Yeah, I guess I should probably explain maybe where that question is coming from.
Yeah, please.
But back in April, Freddie Mac sort of asked permission to get into the secondary mortgage market. So a second mortgage is like a home equity loan or a HELOC, or it's when you already have a primary mortgage and you want to tap into the equity in your house, you've got kind of two options. You can either take out a secondary loan, secondary mortgage, or you could refinance the whole thing. And as of recently, with rates rising from 3% to 7%, nobody really wants to tap into the equity and give up their 3% mortgage and refinance the whole thing for 7%. So second mortgages are really growing in popularity as homeowners are trying to tap into the equity, the increase in equity that they've seen in their homes. There's about $32 trillion of equity estimated to be in U.S. homes.
Wow.
So in late June, the Federal Housing Finance Agency said in a statement that Freddie Mac could buy as much as $2.5 billion of mortgages over the next 18-month period. Now, that's sort of a drop in the bucket when you look at the whole mortgage market, and that I think comes as a response. J.D. Vance, who is President Trump's running mate, was actually opposed to Freddie Mac getting into the secondary market because he was concerned, one, that it would boost inflation as people got into more debt to spend more money. I hope he applies that same thought to the government.
Oh, sure.
And that it could crowd out private investment. So, I think when Austin asked the question, it was maybe before they came out with the final ruling and said what Freddie Mac would be able to do. So they are going to be very limited in what they can do.
Definitely. And then the second part of his question, he's read that sale leaseback companies becoming increasingly predatory, wise to consult a lawyer or trusted real estate professional. His question is, should house/real estate rich cash-strapped people be on guard?
Absolutely. I mean, it's sort of like the whole reverse mortgage market as well. You really have to have some basic understanding of like the time value of money to be able to determine whether the deal that they're going to present you with for you to sell your house and basically lease it back from them has good return numbers. So definitely be on guard about that.
Yep.
Well, folks, we are about to hear from Craig Haugaard with the Ag Report. After that, we're going to take a short break, and then we'll be back and we'll pick up on our conversation from the very beginning of the show. Here comes Craig.
This is Craig Haugaard with your Financial Issues Ag Update for July 19th. Well, corn came under solid selling pressure in yesterday's trade. Weather remains the biggest anchor on the corn market right now, as the ideal growing season has many starting to talk about a new record corn yield, which could be well above the USDA's projected yield of 181 bushels per acre. At the closing bell, December corn was 6 3/4 cents lower at $4.05 per bushel. Soybean futures edged higher for the third consecutive session. Now, in reality, it looks like November soybeans are in a sideways consolidation as they look for fresh news to move them one way or the other. November beans ended the session 2 cents higher at $10.43. We had a mixed close in the wheat markets as concern over EU quality grabbed the trade's attention. Now, the main concern seems to center around French wheat and determining what percent of that is going to end up as feed wheat versus milling quality. Some traders believe that due to the poor quality of the crop, over 50% of the French wheat crop may end up as feed wheat. At the close, Minneapolis September wheat was 8 3/4 cents higher at $6.50. Kansas City rose by 1 3/4 pennies to close at 5.62 3/4, and Chicago was 4 cents lower at 5.35 1/4. Cotton futures were marginally lower. At the close, we had December down 14 points at 71.93. Livestock futures were mixed. We had October live cattle $2.55 lower at $183, 2.5 cents per hundredweight. September feeder cattle also dropped by $2.55 as they settled at $257 per hundred. Cattle were weaker as traders positioned themselves ahead of today's cattle on feed report. And we had October lean hog futures increasing in value by 35 cents as they closed out today at $74, 2.5 cents per hundredweight. Class 3 milk futures broke out of their recent range and moved sharply higher. At the closing bell, August futures were up 40 points at 20.17. Well, this has been Craig Haugaard with your Financial Issues Egg Update. We'll be right back with more financial issues after this.
Samuel Case, news anchor with FISM News, sits down to read real comments from real viewers.
You know, I tend not to read social media comments, so this is kind of a big deal for me. I'm kind of nervous, but we're going to see how it goes. It's not George. Thanks. It's been a while since I've watched real news. I kind of have a suspicion your name actually is George, but, you know, regardless, thanks so much. We really do strive to be as authentic, real, and professional as we possibly can be, so we really do appreciate that you're picking up on that. And this one's from Echo Pixel. Keep spreading truth. Will do, Echo. Love this. It's just the news, no spin. It'd be nice if all the news was this way, honestly. Just all the facts and no biases. Sadly, that's a pipe dream, though. If you don't like what other news outlets are doing and you like what we're doing, you can always follow us on FISMnews.tv. That's our website. You can also follow us on social media and by downloading the FISM app as well.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common, the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Good to be here with you on Financial Issues, folks. It's been a busy Rapid Fire Friday, hasn't it, Shana? We've gotten a lot done in the show here. Kind of bringing back to where we started here, Shana. Let's go back to the first segment where we were talking about financial advisors. It's a question that we get a lot on the show, and you were sharing some of your insight on kind of what to look out for in a financial advisor, and even kind of helping us consider whether we should look for one at all. And you had even shared some of your own personal thoughts, about if someone came to you from a client's perspective and said, hey, I want to use you, but I don't really care much for biblically responsible investing, you would have to follow your convictions as well. And so it's just really important to have those same convictions there with your advisor. But just as a follow-up here, Shana, if our listeners would choose to utilize the help of a financial advisor, what qualities should they look for in someone?
Yeah, so just to expand on that a little bit more, if somebody came to me and said that they wanted to hire me and they said, hey, I know you're a Christian and you do biblically responsible, but I don't really care about all that. I just want to make money. And, I think to make money, I need to own Microsoft and Apple and, all of these other companies. I would respectfully decline, not out of a spirit of judgment but because this is what I do. All of my time and talent, my heart is completely convicted. I'm completely devoted to running a biblically responsible investment strategy. So all of my time and talent are behind building these biblically responsible portfolios. So if I said, well, okay, I want your business because maybe it's a large account or something like that. So yeah, I want your business, and you know what? I'll do what you want me to do. Now I'm going to have to split my time. I'm going to have to continue doing what I'm doing for the clients that I've already committed to, and now somehow I'm going to have to find time to do a different strategy for this other client. So it's really doing a disservice to both groups of people. It's going to take my time away from what I had already committed to do, and it's I'm going to be doing something, coming up with a whole nother strategy that, maybe I'm, is not really in my wheelhouse. So, if I have to devote time to another strategy, I'm now double-minded. My time is split, and, I'll be less efficient and less of a benefit and blessing to the people that I've agreed to serve already. So I won't be able to do a good job for those clients that I've already committed to. So if you're hiring someone to give you advice, it doesn't mean that you have to take all of their advice, but what you should understand is that if you're willing to pay for their advice, you probably should make sure that it's coming from the right source of wisdom, and that's the wisdom that you ascribe to as a Christian.
Yeah, it's good stuff, Shana. So what I'm hearing there is probably one of the first qualities to look for is someone who is biblically responsible, someone who is able to kind of be aligned with you also there. I think that's really good. Shana, we'll get back to you in just a moment there. I know you're getting your in-ear back here, but folks, as we continue to talk about this, I just want to remind you that, if these questions bring up questions for you, please ask. You can obviously call in 610-363-1110, and we might have time to get to one more. Probably not today, though. But the phone lines are always open, and, of course, back. You can also ask on Ask Shana. There she is. She's back.
Sorry about that.
No, that's okay. That's okay. So, yeah, Shana, that's really helpful there. And I think one of the most important things that I kind of got from that is biblically responsible investing has to be highest priority. What other qualities should we look for in a financial advisor?
Well, you have to know what you need help with, because there's a lot of different things, as we talked about earlier in the show. Do you need help building and managing your portfolio? If you're following our strategy, maybe you've got that part under control. But maybe you need some help with financial planning. Maybe you need help with budgeting. Maybe you need help with estate planning or tax planning. So, you have to, when you're interviewing financial advisors, you have to really ask them what their services are. And you want to make sure that you have a conversation about what it's going to cost. So the total cost, if there's cost inside, if they're using mutual funds and ETFs, there's cost already in that on top of whatever they're going to charge you. What do you get for what you're paying? So, we're very clear with our clients about what we charge and what they get for that. So, we don't really help people put together monthly budgets or anything like that. But, we bundle investment management. We use the financial issues strategy. So we eat our own cooking here. So we use the financial issues strategy, the portfolio, and then we also help with things like distribution planning, tax planning, planned giving, estate planning, and those kind of things.
It's awesome. Just to kind of wrap up the conversation, Shana, last question. What would be maybe some warning signs to know when, it might be time to cut ties with a financial advisor?
Well, if they're dishonest with you, for one thing, if they say that they'll do biblically responsible investing, but they don't do it the same way that you understand it, or they don't do it at all. I've even heard things like that happen. If they try to talk you out of your convictions, if your heart has been convicted by the Holy Spirit to do biblically responsible investing as a way to honor God, and they try to talk you out of it, that's a red flag. In my opinion, our founder, Dan Celia, used to always say, don't you ever let a financial advisor talk you out of your convictions to honor the Lord, or rob you, I forget exactly how he said it, but rob you of the blessing of honoring God in your finances. If they don't initiate a conversation, if they've never told you how they get paid and what you get for what they get paid, that is a red flag. If they are vague about it, or if they try to dodge the issue when they're asked, that's a red flag. And then you also have to find out what limitations they have, either for products, what they can sell by the type of license they have, or the philosophy of their firm.
Good stuff, Shana. Well, in a week that we've talked a lot about the election with the events that happened last week, I think it's only fitting to take a call here to close the week from Jay about your thoughts on the 2024 election. You want to go to Jay?
Let's go to Jay.
Let's do it. Hey, Jay, you're on Financial Issues. Good morning.
Yes, sir. Yeah, Shana, I might have misunderstood what you said yesterday. I believe it was something about the 2024 election, and I know that's a touchy subject for an announcer like yourself. But what you didn't say that you didn't think that Trump could win the 2024 election, did you? I hope I misunderstood or explained.
Did I say that I didn't think he could win?
Yeah.
Oh, no.
Jay, I can confirm that, too. Definitely not.
Yeah, I mean...
I have age-related hearing, okay?
So, Jay, I actually have selective hearing also. My wife tells me all the time. Sometimes I don't listen, though. So.
It's intrinsic in men.
There you go.
Yeah, no, I think I think there's still some... what do they call it? October surprises that we're in store for. I think we're gonna have some. I think the Democrats have some tricks up their sleeve that maybe we don't know about yet. I've heard all kinds of interesting theories about perhaps they might put Obama on the ticket with Biden. And then as soon as he gets elected, he would step down and turn it back over to Biden. I've heard all kind of crazy things. So I don't know. I don't think the Democrats can run Biden at this point. I don't. You hear so many stories of, the super PACs withholding. I think it was like $95 million that they were withholding. I heard a report this morning that the DNC only expects to raise about 1/4 of what they were expecting to raise for the month of July. That's really bad. So, I think the cards are stacked against Biden. I think it's just a matter of time. I don't know who's going to be on the ticket yet. There's all kind of wild speculation about that. But, I think at this point in time, if we have free and fair elections,
that's right.
I think President Trump is going to win. Now, this is not an endorsement because we're a nonprofit organization and we don't do that kind of thing. So I'm just answering from a standpoint about what do I think is going to happen. I think there are going to be attempts to cheat. I think that's a very common thing for elections. I think it's something that we've been made more and more aware of, after the last election. But
Yeah.
Well, even with that,
that,
Jay, too, I've been seeing some good news from, I think it was Elon Musk. Shana has been promising money to essentially help
a lot of money
to help keep election integrity, which is really good. I agree with you completely. One of the only conceivable ways would be if it's not a free and fair election, for sure, which is possible.
Well, you can count on them trying.
Yeah,
for sure.
Yep.
Well, thank you, and I'll just go check my hearing again.
Thanks for the call, Jay.
Yeah,
you're welcome. Have a good weekend.
God bless, brother.
Well, one of the things that I'm a little bit disappointed with the Republican platform is that it seems that they've weakened their stance on abortion. But that's why our second mission here is to encourage you to is to fund the light, to be a joyful and generous giver. And one of the best organizations that you can give to make sure that life stays a priority in this country is to Preborn. So Preborn Ministries is a partner of ours. They are instrumental in fighting the good fight of faith for the unborn. So we would encourage you to go to our website. You can find out more information about Preborn there as well. Well, we're at the end of Rapid Fire Friday. We're so glad that you stuck with us to the end. We hope that you will come back next week because, Lord willing, we will be here to help you navigate through the financial issues of the day, to remind you that God owns it all, that He is sovereign over it all, that He is coming back, and there is going to be a test. We want to help you be found good and faithful stewards. We hope that you have a wonderful day of worship on Sunday and that we can gather again together next week as we watch Financial Issues. Find out more at financialissues.org.
We ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.